Hello everybody. A lot has changed just in 1 month. April market data will show us the full story of COVID-19's economic impact on housing, since March only showed us the initial impact. Let's see what happened in March. 761 sellers withdrew their homes through Metro Denver real estate market. 82% of those homes that were withdrawn in the last week of March. Home sellers withdrew homes possibly from fears of contaminated home buyers going through their homes or concerns for their jobs and the economy. Following the stay-at-home order by Governor Jared Polis on March 26, real estate was classified as a critical business. There are people out there who still needs to buy and sell a home, and it might be pretty critical for them, so we continue to work. But the way we do business has changed. We're no longer holding open houses or driving with our clients. We are completing transactions at no contact as much as possible. We have a new contract called the COVID-19 Addendum that allows a transaction to be extended in the case a home buyer or home seller is exposed or quarantined, as well as new CDC guidelines to follow when we list or show a home. Pre-COVID-19 spring market was shaping up to be one of the best on record. In March, 30% more new listings came on the market, namely a bit over 6,600 versus 4,600 in the months prior. That pushed the number of active listings by the month's end to 5,776 versus 4,835 in February, in the end of February. That is still 8% less active listings that we had the same months a year ago. We're still in the seller's market. Houses were selling 23% faster as well than the prior months, 29 days on the market versus 38 days on the market. The average close price for all single-family homes and condos was $523,000, set a new record high. And for the first time, the average close price for for both segments of the market topped the $500,000 mark. In March 2019, we closed the most single-family homes in the price range from $300,000 to $400,000. And this March, the highest number of sales of single-family homes were in the price range from $500,000 to $749,000. So the spring market, as I said, was shaping out to be really hot. Foot traffic dropped 50% from the beginning of the month to the end. The good news is that the buyers who were looking were serious, as it took 30% less showings to produce a contract. We all need to remember that COVID-19 is short-lived. What we're experiencing now is not a housing bubble or a natural economic recession. The pandemic is an artificial pause on our otherwise healthy economic growth. And social isolation tactics are what many leading economists are calling a medically induced coma on the economy. That is to limit the number of potential victims. Unemployment is expected to lower as laid-offs are rehired. As the economy jumps back to a more natural state, the GDP will rebound from a negative shrinkage of 18% in the second quarter, according to some forecasts, to positive 10% in the third quarter. Let's hope for that. It will all depend how long the lockdown will last. When we're allowed to leave our homes and go back to work, people will want to re-engage, go out to eat, see live music events and live sporting events, and go out shopping and buying clothes and go to the gym, travel, and oh boy, I'm ready. Thank you very much for listening. This is Anna Merrick with Metro Brokers Impressions Realty. I will see you next month or sooner if we're going to have some dramatic changes in the next week or two. Thank you very much.